Good evening, everybody. Welcome to the Finance Rebel Show. Today's segment is Wealthy Wednesdays. So every Wednesday at 8 p.m., we go live and we answer questions for however long we go for. I'm streaming live right now on Instagram, Facebook, and YouTube, all at the same time. And like I said, I'll be answering questions. So as we get started, do me a favor and share this out with anybody who is looking to increase their financial IQ, because the Financial Rebel Show is all about helping folks increase their financial IQ. How you doing, Sharon? INS Pop Page. I might have said your name wrong. INS Pop Page 21. How you doing? How's everybody tonight? So sadly, there's been a lot going on this week. Corona's still coming fierce, but the market's still doing good. Sadly, we got sadly we have a lot of police brutality going on, and it's really sad. And it's not just police brutality. Let's call it what it is: overt racism. Sharon, I don't have a stock pick of the day. What stock are you interested in? Any stock that you want to talk about, we definitely can talk about it. Brandon Jones, how are you, sir? Thanks for joining us. Doc Williams, how are you? So I was running a little behind today. I think I got started at like 8:05. So as many of you know that follow me on Instagram and YouTube and Facebook, I'm also doing another project called the Black Wealth Project, and that's where we air every Sunday at 8 p.m. and we talk about money issues as it relates to the Black community. Hey Jay Sharia Moore, how are you? I got my mask, Jay, and your mother wrote me a wonderful letter. Almost made me cry. I thought I had my allergies. My allergies were messing with me. So any questions anybody have, go ahead and throw them in the chat. And do me a favor, again, share this with somebody who may need some help with some financial topics. We talk about all things money, stocks, investment, taxes, business, real estate. If it's about money, we talk about it. Jay, I'm trying to see Easy PA to VA. What's up, Aaron? How you doing, brother? I'm trying to see if I got my mask with me, Jasmine. I had to commandeer one before the rest of the family got to it. Miss Vanessa Braxton, hello to you. Hello, Vanessa. How you doing? Shout out to Black Mama Tees. Black Mama T. I don't want to say T's like a shirt. Shirley Davis, how are you, Shirley? How's everything? Gerald Martin, how you doing, Gerald? Uptown is in the house. Absolutely. Uptown all day, every day. Yeah, Jazz, my wife said I should have brought more. But I'll come back around. I'll get some more. So nobody has questions. Oh man, we just waking up. We starting slow. Usually by this time I'd have had like 20 questions in the clip already. Nisi J, how you doing? So I'll answer a question because I get questions throughout the week. Some of them make it to the show, some of them don't. All right. So one of them came, and let me try to find, you know what, I can't get the actual question. But the question was, I recommend, I'm gonna come to that, Sharon. That's a great question. I recommend people, beginners use Cash App for stock market investing. And so with Cash App, you know, everybody transfers money, but guess what? You could also buy stock. You could also buy Bitcoin. Not a fan of Bitcoin, but as y'all know, love stock. So the question was, if Cash App goes out of business, does that mean that you lose all your money? And so I didn't get a chance to answer that question. I'll make sure I'll send that to this person. Sheila Stiff, how you doing? I haven't seen you in a while. But If Cash App goes out of business or they go bankrupt, what happens to your funds? And so Cash App is protected by what's called we call it SIPC, SPIC, Securities Protection Insurance Corporation. I want to say it's Securities Protection Insurance Corporation. So they guarantee, I forget up to what level off the top of my head, but they guarantee your accounts up to a certain level to be made whole if anything were to happen, like they go bankrupt. However, they're just like any other brokerage firm, right? If you had a brokerage account at JP Morgan, if they went bankrupt, it would be the same issue. If you had a brokerage account at TD Ameritrade, it would be the same thing. If you had an account at E-Trade, it would be the same thing. But guess what? Cash App is also owned by a very, very big company. And I think a lot of people sleep on it. And that company is Square. Cash App is actually owned by Square. And so nobody knows who Square is. Square is the people with the little device. Yep, Vanessa, Cash App is owned by Square. You still on my thunder, sugar. But yes, Cash App's not going anywhere. So Vanessa Braxton said Cash App is owned by Square, so it's not going anywhere. LOL. She's right. But Cash App is owned by Square, like I and Vanessa said. And so I just want to look up their stock price real quick and how much they are worth. But Square is the company that handles a lot of e-commerce transactions. And Square right now is trading at $81. At $81, and it has a market cap, or if it's worth $35 billion. So I'm not just recommending some run-of-the-mill crackhead stock brokerage firm. I'm recommending something that's backed. Trust me, I would not recommend anything that I wouldn't recommend my grandmother to use, or my mother, right? Because sadly, both of my grandmothers have transitioned. But I wouldn't recommend my mother to use that. My mom might not be able to figure out the tech situation, right? But she could trust and rest assured that they will be there as long as you know how to use the platform. So, all right, my own girl Sharon asked the question, what's your advice for teaching your kids about wealth? Well, I think that's a very good question. So what's your advice for teaching your children or your kids about wealth? And so one thing I would say is, right, we are trained to be consumers, and everybody knows I'm the finance rebel. Well, part of the reason why I'm the rebel is I believe you have to rebel against much of the quote unquote taught economic and financial wisdom. Almost 70% of the U.S. economy is driven by consumer spending. Everything we do revolves around somebody trying to get in your wallet or in your pocketbook. You got to rebel against that. And what you have to do is you have to develop an investor mindset. So how do you teach children to become investors and about wealth? Other thing you have to do is you have to define wealth for them. I define wealth by time. So ideally one day I can make $1 million a year and I can have $10 million in cash somewhere in the cut. So I got 10 years worth of wealth. I can just sit and do nothing. But, y'all know that's a bit of an exaggeration, right? For some people, for your average person. One day I might just do that. But I look at wealth as time. And so how much time will I give you? How much time does it give the next generations? How much time does it give the generations after that? Proverbs 13:22 says a good man, and they didn't really check for the ladies back in the day, but a good man or woman leaves an inheritance for their children's children. So not just your heirs, your direct heirs, but also the heirs after them. So you, the parents, right? Because people always ask me this. You, the parents, have to develop a wealthy mindset in order to teach a wealthy mindset to your children. But some exercises I would say are start talking to them about money. Children are way smarter than we give them credit for. They can understand. Concepts way better than we realize. We might have to dumb it down. Well, I shouldn't say dumb because no child is dumb. We might have to simplify it a little bit more than we would if we're talking to an adult. But they'll get it. But I would start saying, talk to them. I would say, talk to them about money. Where money comes from. Talk to them about the bills that you pay. Talk to them about how many hours it takes you to pay those bills. How many hours do you have to work to pay your car note? How many hours does it take you to pay your mortgage or your rent? How many hours does it take you to buy your groceries? Right? Start talking to them. Let them know money is real, but also let them know that money doesn't determine everything, right? So I always want to be careful to say money does not define who you are, should not define who you are. Money is merely a tool, and wealth is actually greater than money, right? If you're fat, sick, and nearly dead, right? By the way, that's the name of a documentary I think everybody should watch. Fat, sick, and nearly dead. But if you're fat, sick, and nearly dead, and you got a bunch of money, can you really enjoy it? Are you helping your family, your extended family? Are you helping your community? It's deeper than just money. I tend to talk about money because in our community, in my community, the Black community, we always have money issues. And oftentimes, many of those money issues can be averted. But I don't feel, and this is no diss or downplay to anybody, we don't want to leave behind old thinking. Or at least reevaluate old thinking to see if it's still relevant to this day. Again, that's another conversation we could have on another day. All right. But I would talk to him about money. Here's a story. If anybody has ever heard of a gentleman named John Rogers. John Rogers is the CEO of Ariel Capital. Many of you probably know who Mellody Hobson is because she is married to George Lucas, the famed Star Wars creator. But Mellody is also on TV a lot. She's very much a financial literacy advocate. However, Mellody, I don't want to say she works for John at this point because at this point they're more like partners. But she started to work for John. That's where she had a career at. But John Rogers is an investing rock star in my mind. He's a Black man who has an investment company that invests billions and billions of dollars. And the thing that got him invested or got him interested in the stock market was his dad would buy him stock and let him have the dividends. And I was thinking about his story because my dad didn't give me dividends, but I did see my dad get a dividend check a lot. We got a dividend check from General Dynamics, and it would come like clockwork every quarter. And it always intrigued me, like, why are you getting this check? And so very much like John Rogers actually had the money to play with or invest with once his dad started buying the stock. And that sparked his fascination for it. But I would also, I would do that for birthdays and for Christmas or whatever holidays that you celebrate. I would make buying stock a part of those. We buy a lot of dumb stuff on these birthdays and holidays, especially for these babies. It's definitely not needed. Kids get a toy, they play with it for a little bit, maybe a week, maybe two, and then they're off to the next, unless it's something they really, really want. Now, I don't want to be the Scrooge, right? I don't want to ruin Christmas or ruin any other holidays. However, I do think you can take $25, $50, $100 and purchase stocks for your children and your loved ones instead of buying them, this toy or these clothes that will only maybe be worn once, and that will go out of style and nobody will want them to wear it, or they'll have this toy that nobody cares about. Like for me, I really don't understand why people buy their kids Jordans. I know some people like it. To me, it's a big waste of money. So, if you can just look at some of those things, and again, that's no shade, there's no judgment. I don't understand it. I've never had a pair of Jordans in my life. I saw a pair of golf Jordans though. Man, they pretty, but they cost too much. I looked up how much they cost, and in the aftermarket, they're like $1,500. So there's no way I'm spending that much money on a pair of Jordans. But Sharon, I hope that question helps you, guide you in the right way. And again, you can have conversations with them about money. I tell everybody, if you really want to learn about money, go get the USA Today in the money section and just pull different things out of the money section and just have a conversation with them about it. Matter of fact, let me see if I can do that. If I can do that right now. Keep the questions coming in, everybody. Keep the questions coming in. I'm going to pull up USA Today money section. Let's see what they're talking about. Let's see what they are talking about. So bear with me 1 second, everyone. So right here we have the USA Today. If you can see it, everybody put yes, I can see in the comments, just so I can make sure that this is working. Sometimes I do it and people can't see it. But just let me know so I'm not just talking for no reason at all. Mr. Lewis, how are you? Kia, how are you? You making them pay for snack sharing? Yeah. Take Digital, you said no. What are you saying nope about? I guess you can't see it because you're over on IG. No, they Alton, my man. Thanks for joining us again this week. My homegirl, Kaizen Investor. How are you, Gia, excuse me. All right, so on the screen right now, I have the section of the USA Today, right? And so the USA Today, let me see if I can blow it up. Can everybody see it clearly, though? Hopefully everybody can see it clearly. I don't think I can blow it up. At least it's not giving me that opportunity. But when you look on this, right, on the front page, what are they talking about? They're talking about bankruptcies. I can talk to a child about bankruptcies, right? Bankruptcies, store closings piling up. We already saw JCPenney's going out of business. All right, so that's just one article. And as we go, let's click on that article, right? So bankruptcy cases, stores closing pile up as coronavirus wreaks havoc on JCPenney's. And so what I would say to a child, I would say, hey, now, me and my wife, sometimes we shop at JCPenney's. Rarely. But we have, because they have like good sales for kids stuff. My kids are teenagers now, so it's no good right now. But before, so I would talk to them. I say, hey, you know, everybody's getting sick right now. The government wants us to stay in place in the house. As a result of that, people have been going out spending money. And so since people can't spend money at these stores, they can't afford to pay their bills. They can't pay their light bill. They can't pay their rent. They can't afford to pay their employees. They can't buy inventory. Inventory might be a little weird. You could say supplies or something like that, right? But you can just explain it to them. Just talk to them. Kids ain't dumb, right? Just talk to them. Kids are not dumb. And just explain to them that, when there's not enough money coming in, bad things happen to these companies. But let them know that it's also part of life. It's the cycle of life and business. There are life cycles in business. Mr. Thorne, Mr. Greg Thorne, how are you, sir? Brother Wayne, 215, how are you? Thank you, everybody, for joining. So I would talk to my child about this. I talk to my children when we have dinner about these topics sometimes, because I don't want to talk about The Flash or Naruto or any of the shows my kids like. I want to talk about something else. Purpose PR Agency, how are you? Thank you for joining us. And so you can talk about these things right now. When you go back, let's go back to the front page of the USA Today, right? They got things like that Visa in the mail might have been your stimulus check. So they're talking about how the government is now sending out EBT cards, almost sort of like as stimulus checks. People don't know that. A lot of people don't know that because because the government did a terrible job communicating that one. All right, you could talk about as many as 2.4 million jobless, as many as 2.4 million more jobless claims. You could have a conversation about that. Tesla, Now remember, guys, everybody likes to talk about the stock market, but remember, the stock market is merely a place for businesses to raise money. So when you're buying stock, you're buying a piece of a business. Oh, hey, Portia, how you doing? So it's not that complicated. I know a lot of times people just in society overall don't like to talk about money. Now is a good time to kind of break that cycle. So here is an article, right? Here's an article. So the stock market is keep going up. People are like, well, why does the stock market continue to go up when the economy is doing bad? And people don't realize that the stock market is forward looking, right? It's predictive to a certain degree. It's thinking about the stock market, or investors in the stock market are thinking about what companies can do in the future, not what's going on right now, right? So, again, you could just go ahead and say, look at it. Stocks close higher on Wall Street Wednesday, extending the stock market's gain into a third day on hopes for a coming economic revival as larger swaths of the country relax stay-at-home mandates imposed due to coronavirus pandemic. You can talk about that. Despite a choppy day of trading, the S&P 500 gained 1.5%. So the S&P, hey Edith, the S&P 500, which is the 500 largest companies in the United States, all of those companies, and on average, gained, their stock price gained or increased in price by 1.5%. So, we're still rolling. Hey, Karan, how you doing? Karan, you sent me a text. I don't think I ever got a chance to get back to you. I got to get back to you because I'm interested in that. And then it goes and it talks about some of the sectors, right? So it's talking about financials, industrials, and healthcare. So all of those things are, a part of the stock market. And, I have to tell people, if you're really serious about becoming a stock market investor, just the regular stuff. I ain't talking about the fancy stuff. You got to be dedicated to it. You got to practice it like it's your craft. Like if you're a baker and you bake every day, you should be looking at the market every day, or at least a couple of times a week, right? I ain't trying to stress nobody out. However, you got to be serious about it. You got to be committed to it. And yes, thank you, Edith, for the reminder. These shows are only for education and entertainment purposes only. Remember, anytime you make an investment, to talk to your investment and tax advisor. Remember that past performance is not an indication of future results. So what that means is, don't blame me if y'all go out and buy a stock, because I'm not telling y'all to buy stocks. We just talking about stocks and teaching about stocks. So I don't want nobody saying that Kamari told me to buy this and I lost my house. No, that ain't the case, G. Do your own research. Everybody got to do their homework. Do your homework, do your homework, do your homework. There is no such thing as free lunch or a free ride. You got to do your homework. JJKK18 says, what about real estate? What about real estate? What do you want to know? What's the question? I think real estate is going to be in a very, very precarious place. A lot of it is going to depend upon what the Fed and what the overall government does, whether it turns good or bad for the economy. The way it's looking now, I don't think it's going to be that great. I don't think it's going to be that great at all. But give me a more pointed question, and I can try to give you a more pointed answer. So, hey, DCJ, hey, Tayway. Yes, Vanessa. So, like Ford, I'm reading in advance. So, yes, like Venmo is owned by PayPal. Yes, a lot of people don't realize Venmo is owned by PayPal, and it's a totally different culture than PayPal. Very, very strategic about that. Hey, Carol, thanks for joining us. Carol Allen asks, what do you think about Ally Invest? They have a commission fee for $9.95 for mutual fund buys. I pay a fee of $49 when I buy a fund on TD Ameritrade. So let me start here. I hate mutual funds. I like ETFs. I hate mutual funds. I like ETFs because usually the ETFs have a cheaper or lower fee structure. And for the most part, you can find an ETF that does what a mutual fund does for lower the cost, right? A fraction of the cost. I don't know why Ally Invest is charging $9.95. Most of these brokerages are now they are commission free. I'm not sure about mutual funds though. Again, I rarely look at mutual funds. The only time I look at mutual funds is when I do 401k reviews for my clients. But that's about it. And you pay a fee of $49 when I buy a funnel. That seems like a ripoff to me, but geez Louise, $49. Yeah. Again, I don't know what you have. Again, this is not a recommendation. This is just a thing to consider. Whatever mutual fund you have, 9 times out of 10, there is an ETF that you can buy that mirrors that same mutual fund. So mutual funds typically track a benchmark like the S&P 500. ETFs usually track a benchmark like the S&P 500 or the Dow Jones or gold miners or gold or that was the Shanghai. I can't think of the Shanghai Stock Exchange. But all of those, you have a mutual fund for, you also have an ETF for. So, yeah, I don't know about that one. Okay, so JKK18 says investment. So you're thinking about Kirk Keys. How are you doing, sir? Thanks for joining. You're looking at real estate as an investment. I think real estate's fine as an investment, but it's based on location. What are you going to do with it? Are you looking for a flip? I got some clients right now that are doing flips and the market's already softened on them, meaning that if they don't get this flip on the market right now, they're going to miss the summer season and the market has already kind of dropped a little bit. But that's in Philadelphia. That's in my area. I can't speak about real estate markets in other areas. And no, I don't think real estate is going to totally bottom out. I do think real estate is due for some pain though. So I would just say this. I don't know what your situation is. I wouldn't be in a hurry to spend my last dollar on a piece of real estate. Is it good to invest in gold and silver? I like things that have value behind them, right? I know my gold bug's going to hate me saying that, right? So gold's cool, right? Gold is a great hedge. Actually, let's do this. Gold is a great hedge for inflation, right? And everybody's talking about inflation after this round of stimulus and these next upcoming rounds of potential stimulus. And so what I find is a lot of people are still operating off of old school economic models. If you remember back in 08 and 09, folks were talking about, we had cash for clunkers, we had the incentives and the bailouts and everything else. Inflation is going to rise. I'm still looking for that inflation right now. Prices haven't really risen since 08, 09 for the most part. When we talk about inflation, we really don't talk about food and fuel or gas, oil, because, they rise and fall very, very erratically. But for the most part, a shirt's still the same, a pair of pants still the same, a loaf of bread is still the same. But they all said that we're going to have this upcoming storm of inflation. And all inflation is, right, is the rise of cost and goods and services, right? I'm giving you the actual economic term. The rise of cost and goods over time. And so typically when you see goods overall increase, it usually takes more of your money to buy those goods. Because typically, let's say, all right, here's a great example I like to use a lot. When I started driving in it's either 1992 or 1993, don't judge me. Don't be trying to calculate my age either. Gasoline was about 99 cents a gallon. Now, I know I just said we don't count gas and oil as inflation, but this is probably the best inflation I can think of. Right now, gasoline is $2.05. It's $2.05, so it's at least double. Other times it's triple, right? I don't know if anybody remembers when gas hit the oil went up through the roof, and I want to say that was 07, either 07 or 08. It was I'm trying to think how much gas was then. Let me see. Oil was through the roof. I want to say it was over 100, maybe $150, $160 a barrel. And at one point, you had gasoline that was at like $4 a gallon. I know in California, I believe gasoline hit like $5 a gallon. So, people like to buy gold and silver to protect against those things. Right now, gold is up. It's on a nice run. It's definitely on a nice run. Of the gold contract. Give me 1 second. So gold is up. People like gold because for some reason, people are stuck on the gold standard, and they think that since money is not backed by gold, it makes money less worthy. There's a lot of people that believe that. I would ask them to say, well, what makes gold so valuable? What makes diamonds valuable? What makes silver valuable? Right? It's not, it doesn't generate any kind of value behind it. It's not like a company that takes, let's say, gold and then makes catalytic converters, right? Or takes silver and or palladium and creates catalytic converters. Gold is usually worn for adornment. It's basically used for jewelry. So, I'm cool with gold, but like I said, I'm going to pull up the chart. Let me share the screen. Let me share the screen real quick. Again, if you're just joining now, you're watching the Financial Rebel Show. Today's show is Wealthy Wednesdays, where we just answer questions. All right. I'm just answering questions, answer the questions that are on your mind about what's going on out here in these money streets. All right. So can everybody see the chart? This is the gold chart. Each one of these bars represents 1 month's worth of gold pricing. So right now we see gold trading at 1710. Not bad in terms of price. But what I don't like about gold is you'll see it'll tend to spike. It'll tend to spike after, crazy things like the Iran oil crisis. I might be dating myself here, right? Because that happened in the 70s. I know I got a couple of young folks on here that don't go for that far back, but I'll say this: if you're really interested in investing in the stock market, become a student of history. So I have one indicator on here. Indicators, I'm not a big fan of indicators though, right? And what I mean by that is you can't base your entire investment based on indicators. You can use them as a guide, but at the end of the day, I think it takes a lot more work to do some things. Why? I thought my account was upgraded. But so all right, so when we look back here, right, this is August 11. Gold was 17, almost $1,800. Next month, right? So back in August. And say when you come forward, right? We're at October 12th. Then gold starts to dip into a downward trend, right? And it kind of bottoms out December of 2015. You know what I should do? Hold on. So to make this a bit more. So what I've done here is I'm overlaying the performance of the S&P 500. I'm using the ETF here. So this orange line is the S&P 500. And so you'll see here that gold is actually outperforming the stock market, right? So we're using gold as a proxy. I mean, we're using this SPY as a proxy for the stock market. And then this is here, the price of gold. So we look here, December 07. If you remember, if y'all can go back that far enough to December 07, you remember that the world was starting to shake up. And then we go in, gold price starting to accelerate. We're into March. I want to say Bear Stearns went out of business early in the year. I want to say March, but I'm not totally sure. But then, you look here and in March of 08, or maybe it was March of 07. I think it might have been March of 07, because then Lehman went out of business in September of 07 because Bush was still in office. I ain't heard that name in a long time, have y'all? All right, so we get here to March of '08. Market's still acting kind of funny. Gold drifts off. Stock market falls off, right? Stock market had a major fall off in October. So that's August. And then, September, October had a major fall off. And then, so we look here around this November, October time period. And then you start to see gold just take off like a rocket, right? But what's happening in the world? What's happening to the economic picture? We're in a recession at the time. Economic growth has slowed, has actually reversed. Nobody knows what in the world's going to happen. And in February of '09, well, actually March '09 was the real bottom of the overall stock market. The stock market starts to bounce back. But look at what's going on. So gold's still running. It's running until about October 11th. And we were still kind of in shaky ground during that time. And again, it starts to trend sideways. And as the stock market is getting its legs, what's gold doing? Gold starts to diverge and it starts to go down, right? Then we get here to about November 15. It starts to bounce, goes up, trade sideways. Stock market is still going up. Even now, right? That gold's at this major high. It's not at an all-time high, but it's probably at a 5-year high or 8-year high, something like that. It's still there. But just looking at the price pattern over this last decade, what are you expecting to happen? Now, I can take this back to about 1997. And so gold, again, will do great. And then it'll go into these periods where these time frames where it just trades sideways. And mind you, while it's sideways, right, it's not doing anything. You don't get any dividend from gold. That's why I like gold miners better than gold. Matter of fact, we've talked about this before now. I think about it, right? So I'm going to bring gold miners up. There's the ETF that tracks gold miners called GDX. All right, so there's a gold miners segment. For the most part, it tracks gold. This is the purple line right here. It's not the same price as gold, but it tracks gold's movement for the most part. So when gold goes up, GDX goes up. When gold goes down and sideways, GDX goes down. So you begin to see that. It's not perfect, but for the most part, I would rather own GDX than old gold. So like here, again, here the purple is GDX. These candlesticks, these red and black sticks here, they're called candlesticks. They're a technical thing as well. I'm not going to get into the technical thing, but it's a way to look at price. But that's gold. That's the price of gold. And here is SPY, which is the ETF that tracks the S&P 500. So again, for me, I would rather have either GDX if I'm looking at gold. And there's also some other miners in there. There's some gold miners in there and silver miners in there as well. But for the most part, it's predominantly gold. If I'm looking at, and I know I'm being a little bit long-winded, so just bear with me, folks. If I'm looking at gold, I would rather buy GDX than actually buy gold. I don't buy this notion that the world's coming to an end and that people are going to accept my gold as payment if the world comes to the end. I don't believe that at all. I don't think anybody's going to take anything if the world comes to an end, if we have the zombie apocalypse or Sharknado or whatever you want to call it. I think the only thing people are going to be interested in is food, shelter, clothing, maybe transportation, gasoline, ammunition, and firearms, and water. Water probably being the most important thing. Now we have like bad air quality and things like that. Then yes, we might have an issue for masks like we're seeing right now. But for the most part, I don't think we'll have an issue. Laconia Murray, how are you? Murray. I have a friend named Murray, so I'm sorry. They pronounce it that way. Ms. Parker, how are you? So JJKK, I hope I answered your question. What do I think about crypto? I like blockchain. I don't really care about crypto. I like blockchain. And I'll be talking a little bit more about blockchain. So Kurt Keys says a bunch of stocks are at a depressed price. Do you think it's a good time to ride the wave back up? I think you could be. So here's the thing. Yes, there are a lot of stocks that are out there on sale. Let's stop this. Yes, there's a lot of stocks that are out there on sale right now. However, there's a thing called the value trap. And I think I talked about value trap last week, right? So things might drop and the price may look terrible. And you might say, hey, this looks like a steal right here. I can get this for a steal. But then all of a sudden you have a company like a J.C. Penney's, right, that comes up and files bankruptcy. Y'all help me out here. Who else filed for bankruptcy? Type that in the chat. Right. And let's see, what was J.C. Penney's stock price? So J.C. Penney's stock price on May 4th. I don't even think they're trading anymore. I think they've been delisted already, but just in case I'm wrong. Okay, so they are still trading. So they're about $5. But when you go back to, let's say March, when things was getting really spicy around Corona, and you know what? Let me share the screen again. I'm sorry, folks. I'm looking at this thing and I'm not bringing y'all along with me for the journey. So let me do this because I got a whole bunch of stuff going on the screen and y'all probably like, what in the world? All right, so right now I'm just showing J.C. Penney's, and right now J.C. Penney's is trading at $5. What do we close at today? $5 and they closed at $4.71. That was the close of the day. J.C. Penney dropped today by almost 20%. Look on here, I just thought about you today too. So, back in March, J.C. Penney was trading at, let's see, March 12th, March 13th, March 18th. They were trading at $11. So they went from $11 to $4 over the last 2 months. And, they had a significant fall then, but it's still falling. So a lot of times what I experience is people aren't patient. Like, I'm going to just keep it funky with y'all. People hate sometimes that I might move slow or I'm not quick to give an answer to certain things. And there is a reason why I am slow to give an answer on certain things or my opinion on certain things. It's because I'm looking to see how things shake out. I'm not really doing prediction work per se. I'm looking to where it's kind of already going, where the fuel is already going. Anybody know what's that old school saying, right? In science class, when we all thought science didn't matter, where science had absolutely no use because you were learning something that you couldn't see that applied to your life. But what is it? An object in motion cannot be stopped until it meets. Wait a minute. An object in motion will stay in motion until it's met by a force that is equal or greater. And that's the law of inertia. The law of inertia takes place in the stock market also. I feel like I don't get that definition right, but I think I'm close. All right. So, you just have to think about these things when we're talking about a value trap, is that if it's already fallen, you don't want to catch a falling knife. You got to be really skillful to catch a falling knife, because if you don't catch the handle, you're going to catch the blade and then you're going to cut yourself. And so either way, it's really bad for the investor. So sometimes it just pays to wait. A lot of people don't want to wait because they don't want to miss out. And, I always talk about how I am all about being for the beginner. And when I say being for the beginner, I'm looking to get more beginning investors in and into it. So I'm not really talking about the fancy stuff. Listen, I can talk about the fancy stuff all day, right? I used to work at a firm where we managed a little under $1 billion, and I was on the investment committee. And what it means to be on the investment committee is I get to help make the investment decisions for the firm based on what's going on. And so during that process, you literally have to do battle. You have to defend your positions, and you have to defend whatever other analysis that you brought to the table. It's not fun. It's not fun at all. I've reveled in it a little bit, but sometimes it can be very dogmatic. Your average individual investor is not doing that type of work. They're not doing that type of intellectual work. And that's not to put y'all down, but it's to say that I see a lot of people make mistakes because they don't really want to think through their positions. And they don't want to try to do what I might call a decision tree and say, well, if Ford falls to 5, right? And y'all know I use Ford as my proxy. If Ford factory shut down, what's going to happen to Ford? Well, Ford's got how many billions of dollars? How many billions of dollars in the bank? I told y'all this last week. Let's look it up again. They got several $billion in the bank. They indeed did experience a shutdown. They indeed did suspend their dividend. But what did I tell y'all? I said, I'm going to keep buying Ford because I'm looking to establish a position in Ford a lot, which is 100 shares. And I know the government's not letting Ford go by the wayside. And now Ford's coming back. Ford's up 3% today. Ford is now trading at $6.03. I was buying shares at 4 something. I've seen people call Ford trash. And by some standards, you could say it's trash. But I have a long time horizon. I don't ever plan to sell Ford. Right. So I'm using Ford as a prompt or a proxy to help teach you all about investing and show it, because everybody wants to see what's the real deal. So that's part of the reason why I do that. And I think Ford has run way better than GM historically. Right. So it wasn't a value trap for me because I'd already kind of thought through a lot of that stuff. And listen, I could have been wrong. Right. And you just have to deal with that. But again, over the next 10 years, I don't think Ford's going anywhere. Put in the chat if y'all agree with me or disagree, right? Do you think Ford's going somewhere? Say yes or no over the next 10 years. So, again, JCPenney to me could be a value trap. I don't know if JCPenney is going to be able to beat COVID-19. I don't know if it's going to be able to beat it. Too slow. They were too slow to get online. They were too slow to do a lot of other things. Everybody that goes to JCPenney's is they are trained. I need to fix this. They are trained to get coupons. And so once you train a customer to get coupons, they usually don't want to spend. And so what that means is JCPenney's margins are going to be compressed. And what I mean by margins is let's say they buy a pair of jeans at $1 and are able to sell them at 10. Well, with the coupon usually gives a 20 or 30% off, right? So then they're probably used to selling at 7. Again, this is an example. If the customers are trained to not buy their jeans at 10, but to buy them at 7, people are going to go away from there. They're going to go somewhere else. And they haven't found a way to kind of get over that hurdle. So, you got to be careful when it comes to things. Okay. And so let's see here. So as of last quarter, Ford has $46 billion in the bank. In cash, I think Ford will be just fine. And that's why I always trust y'all to look and see how much cash a business has. All right. So, Kurt, I hope I addressed that. So, Kurt, just to put a period on that, you got to address it by stock basis. All right. So, just because, the market's looking pretty good right now, I wouldn't be looking to buy a JCPenney's or an American Airlines or a Delta or anybody in hotel and hospitality. Yes, Edith, thank you. If interested in stock market, become a student of history. Thank you. Yeah, I got the email, Laconia. I was thinking about sending you an email earlier today, too. Kurt, you bring up Hertz. Uh, who wants to talk about Hertz? I would kind of stay clear of Hertz myself. I think Hertz. I think Hertz is no, that ain't gonna work. I think Hertz is in the same boat. I think they could come back. I think they could come back, but they're gonna need a boatload of money. Who's renting cars right now? Who's really traveling right now? I mean, some people are, right? I mean, everything hasn't totally stopped, but again, I wouldn't be in a hurry to buy Hertz. Somebody tell me what Hertz ticker symbol is. I think it's HTZ. HTZ. Oh, HTZ. Wow. Sucker just fell off a cliff. All right. And Hertz is now a penny stock. Now, y'all know I don't like penny stocks. I will sometimes make exceptions for established brands who are now in penny stock land. And remember, a penny stock is anything that is below $5. So wow, Hertz looks sad. I think Hertz is an example of a value trap. I bet people bought Hertz in April at $5 and they said, oh, it's cheap. Hertz will come back. Didn't think about doing any more work. Hertz was $2.87 on April 24th. And it was $7.71 on March 25th. So on March 25th, Hertz was $7.71. And on April 29th, it closed at $4 even. So you saw a downward trend starting to occur. On May 22nd, it was, $2.87. Today, it's $1. Now, listen, if you want to gamble, right? So I don't really talk about gambling because investing is not gambling. It's investing. It's research. It's analysis. You could say it's some risky betting, but it's not gambling. All right. If you want to bet and you want to go buy 100 shares and 100 shares won't hurt you, you can throw it on Hertz because we know at some point we'll have rental cars, right? At some point, the economy is going to bounce back. Again, this is not a recommendation or a suggestion. We're just talking about it for educational and entertainment purposes only. But if you want to gamble and you feel like, hey, I can lose $100 or $112, you can buy some Hertz. I just have no idea when it's going to bounce back. I don't know how. I don't know. I don't have any idea if it will it make it through bankruptcy. I'm not willing to take that gamble. That's just me. That's just me. Now, if I got some throwaway money, $100 here, $100 there, sure. I don't have that kind of money. I'm trying to build a business. I'm trying to make my platform better for you all. So I have to buy, equipment. Like I got to do new mic arm and things like that. So I would rather invest it into my business to give you all a better experience than to spend it on Hertz. That's just my opinion. All right. So I see I got some comments over here. We got to that one already. I'll invest. Joe Mark says I brought forward a few weeks ago when you discussed it on your show. Dollar cost average got it down to $4.80. Now it's over $6. You think it's still a buy? Now, Gerald Martin, I hope you did not buy Ford because I'm buying Ford. I'm buying that and I'm buying. I'm using those as illustrations for y'all. I am buying Ford. I am putting my money into Ford, putting my money where my mouth is. But yeah, I'm still buying Ford. I'm mad it's over $6 right now. You liking it at $6? I loved it at $5. I loved it at $4.50. So here's the thing, like as y'all get into doing research more, right, you might see a stock that's, let's say, $20. And if you see it fall to 15, if you loved it at 20, you should love it even more at 15. Bearing that nothing material has changed, right? No change in management, no change in financing, no change in the global economic structure, no change in the tax law structure or the legal structure in the company or the countries that they operate. But yeah, I like it. I still like it. I don't think it's going anywhere. Is it better to invest 40K? So Chili David says, is it better to invest 40K at 20 years old or a 35-year-old? All right, Chili, thanks for the layup. I know that's an alley for me. It's always better to invest early, simply because of compounding interest, compounding dividends, right? So I don't have the calculator right here in front of me. I should actually do that one day. But if you invest 40K at 20 years old versus 35 years old, you got a 15-year start on that money. And if anybody understands the rule of 72, anybody understand the rule of 72? Type in rule of 72 if you understand the rule of 72 in the comments. But if you understand the rule of 72, you just understand that if you divide 72 into the interest rate or the growth rate, that's how long it will take to double. So if you divide 72 by, let's say, 7, it'll take 10 years, roughly 10 years to double your money. And yes, I use a calculator just about calculate everything. But it would definitely make more sense. So you give that 40K more time to grow, more time to experience market ups and downs. And hopefully you can just invest. It would be lovely if you just had 40K at 20 to just throw at the market and just let it sit there and sit and just grow and build and build and build and build. All right, so everybody can see everything. You own a share of Tesla. All right, Chili, let me hold something. Tesla is, I hate Tesla. That's not true. I don't hate Tesla. I hate Tesla stock. All I can say, 3, thank you for joining us over on Instagram. LockDocs30, thank you. That's my homegirl, Kevin Von Bab. Thank you for joining us. Bay105, thank you for joining us. Edith, I'm not following this. So it says some other investment group said anything involved with gas is dead. Okay, anything involved with gas is dead. I'm trying to learn references to forward stock. I wouldn't say anything involved with gas is dead. I mean, I've talked about that though, right? I've talked about how the oil companies that are well positioned in green energy being wind, solar, water, things like that, sunlight, obviously, will be better positioned to take over the future. That's going to happen. But gas isn't going anywhere. And listen, these alternatives have been around for a long time ago. Jimmy Carter had solar panels on the White House, and Ronald Reagan tore them down. What was that, in 81, 82, whatever year it was? I think it was 80, either 80 or 81. One, what a waste of money. One, what a waste of leadership, right? Because we could have been doing leadership in solar because there were tax credits back in the 80s for solar, and they got rid of them. Government got rid of them. And then you saw investment in solar kind of dry up. We could have been on solar a long time ago, but the leadership wasn't there from a political standpoint. So, you know, man, nabbit. All right, so my IG session has ended. Does this to me all the time. And so I only get an hour on IG. But, you know, just going to that comment about gas, I would strongly disagree. I don't think it will be here as strong as it was 20 years ago. But I don't think it's going anywhere either. It's just like when radio came on the scene. When radio came on the scene, it disrupted. I'm sorry, when television came on the scene, it disrupted radio. However, radio is still relevant, still prominent, still needed. So it's just different. I think the same thing will happen with gas. I think the same thing will happen with gas. Stocks are up. ConocoPhillips. ConocoPhillips is up. Let's see what Conoco is talking about. Oops. So let's see what Conoco is talking about. Conoco is CO something. CON. Let's see. Conoco is CONO. And I will share the screen with you all. Cop. That's what Conoco is. Sincerely, how are you? Thank you for joining us. So let's share this. Listen, while we're waiting, right? You're watching the Financial Rebel Show. I am Kamari Ellis. Today is Wealthy Wednesdays. Every Wednesday at 8 p.m. I just answer your questions about money, whether they be about stocks, taxes, investments, insurance, business. You got a question about it, I'll answer it. Usually, if I can answer most. Every now and again, y'all stifle me because y'all just that smart and that witty, that intelligent. But if I can't figure it out, I can find somebody that can figure it out. Or I'll pull it up right here on the screen and we'll go for broke. Chef Larry, how are you, sir? Chef Larry, when you going to do a little pop-up so I can pull up and buy some food from you or something? All right, so Conoco has been on a run since March 18th. So on March 18th, it was $22.70. Now it's doubled. I missed that trade. That would have been a great short-term trade. I know I don't talk about trades with y'all, but I do get excited about them every now and again. I do get excited. I ain't gonna front. ConocoPhillips pays a dividend, 3.85%. So, and ConocoPhillips makes about almost $30 billion every year. ConocoPhillips makes almost $30 billion every year. And ConocoPhillips right now has about $8 billion in the bank. Not too bad. So let's see how their stockpile can do. And if we get more people traveling, I mean, that's why the government wants to open the economies as fast as they are. It's because we already have over 40 million people unemployed. And they know the economy cannot sustain this level of unemployment for a long time without it being a true risk, a national security risk. Because after what's going to happen after stimulus money runs out. Okay, you're going to do drop-offs? Hey, Chef Larry, let me know about that. So, if people stop driving, oil companies go out of business. U.S. oil companies are already getting hit. They're making up for it a little bit because oil prices are back up now because remember before they went negative for like a day, like half a day, and then they popped up. So, I would you could look at Conoco, they pay a dividend. And it's at a low base. So I don't, what? I'm going to look at what are Conoco's highs. I would have to do a deeper dive. Let me see. Let me share this again. Don't forget to submit your question, put it in the comments, and I will make my way through them. Everybody who's joining me back on Instagram, I lost all the questions that were previously submitted. I apologize that I didn't get them, but please go back and submit your questions again. So we're looking at ConocoPhillips. I'm switching it over to a monthly chart before I add on a daily chart. Remember, each one of these bars, whether they're green or red, is a month's worth of data. The red bars are obviously the months that the stock fell more than rose, and the red bars, and the green bars are the months that where the stock price grew more than it fell. All right, that Brooklyn One, thanks for joining. Tay Digital, thanks for coming back. Tay, if you had any questions that you submitted in the last go around, I missed them. I apologize. So go ahead and submit it, or any comments or questions or concerns you might have. Go ahead and list those in the comment section. So let's go back in time, all right? Let me be like Michael J. Fox and Back to the Future and grab the DeLorean. So back in 1991, ConocoPhillips was $7.42. Right? 08. So this is actually pretty good here. 08. So let's blow that up. Let me know if y'all can see this and it's clear. So March of 08, ConocoPhillips was $57.36. All right. The all-time high was back in 14. June of 14 was $85. Now, I'm not going to break out any Fibonacci tools on y'all, but right now it's at 44 bucks. The all-time high was 84. Let's say it just gets halfway between now and the all-time high of 84. That's good money. That's good money. I would need to see a little bit more to like be so sure about it, but that's good money. You know what? Let's look at Exxon real quick. Exxon's ticker symbol is XOM. So how has Exxon performed? Very much the same in terms of movement, right? Very much the same. Exxon is at $24.08. Exxon is the bigger company. But I'm sorry, I read the wrong thing off. So Exxon right now is $46.47. Excuse me. There is a percentage return there when I'm comparing two different stocks, right? So it's $46.24. That's what it closed out at today. Year to date, Exxon's still down. Started the year at $69.78, and today it's at $46.24. Same with ConocoPhillips, is still down, right? So Conoco started the year at $65, and now it's $44. So it could return back to, especially if we get more states open, more people driving, more people buying gas, which drives the demand for oil. But there's still a lot of supply for oil out there. But you never know, by the end of the year, anything could happen. Remember, the stock market is it's future looking. It's a predictor, so to speak. Ms. Edith's back. Welcome back. Ms. Kate, student. Welcome. Thank you for joining us. All right. Keep those questions coming. So, Conoco's cool, oil's cool, but I don't like that for a long-term hold. Have you heard prison stocks Sprint? What's that, Chili? Other used labor. So are you saying that Sprint is using labor? Jail labor, prison labor? Now, y'all know how I feel about investing in prison stocks. Y'all know I think that's like the worst thing ever. But no, I just Googled it and I don't see anything. So give me some more clarity on that. Demetrius Ellis, no relations, but that's still my brother. Are you in monthly dividend stocks or REITs right now? So, Demetrius, it's funny. I'm actually starting to look at some REITs, and everybody REIT stand for Real Estate Investment Trust. All right, somebody type REIT and Real Estate Investment Trust in the chat. I'm looking at some. I think there are some that are pretty ripe for the buying right now because REITs are getting hit really, really hard right now. But it's just like real estate, right? There's different sectors of REITs and real estate. You have hospitality, you have residential, you have commercial, you have light commercial, like warehouses and things like that. You have timber, which is where people actually buy timber or wood. So there's all those kind of things, Demetrius, that go into that plate. I got a couple. I'll probably do a separate video on that, and I'll probably do it soon. Yes, Ms. Edith. Too many in our community that are incarcerated. Yes, I'm not buying jail stocks. Damn Shane, how are you? Nice to meet you. Thank you for joining us. Lone Wolf, yo man, I started to call you today. I don't know, something's weird. It's like Mercury in retrograde or something, or it's Saturn in retrograde, because all the people I thought about today literally are showing up here on my live. But Lone Wolf, what's up, brother? Let's see, Miss Carol. Miss Carol asked the questions. No, thank you. Glad I found your channel. I got my refund back. All right. Yes. All right. So listen, I get happy when people take my advice, right? So if you ever want to get on my good side, like be my friend, like be my BFF, take my advice. It usually works. It usually makes you money. All right. So we were talking about the ACB, or the Aurora Cannabis Company reverse split. And I know there are two people, and I started to do a video just as a kind of a promo for Wealthy Wednesdays. So now I have another testimonial to say that they asked for a refund and they got it back. So I know TD Ameritrade was charging folks with the reverse splits, which I think is totally janky, by the way. I don't know why they would do that. I think companies sometimes like to charge and see if people can test things to see if they get away with it. If you don't call or you don't contest. I think that's bad business, but a lot of people do it. But I also had to recognize that, see, Jumbo, but I also had to recognize everybody doesn't have my same level of integrity. I'll just say that. But they charged her a reorganization fee, again, which I think is total BS. She got her money back. So good for you, Miss Carol. Don't spend it all in one place. Use it to buy some more stocks. Carmela Jean Paul, thank you for joining us, Carmela. Did I see you last week? Most mutual funds are still being charged, but ETFs for most places are free. Correct. Exactly, Kamari. And ETFs tend to have better performance yet without the fees. They have better performance because they charge lower fees, right? And they usually have less transactions too, a lot of times. All right, Ms. Carol said, gotcha. Carl Davis says, you don't find value in the management of mutual funds as opposed to the lack of management in ETFs. All right. Great question. Thank you for that, Carl Davis. No, I don't find great value in mutual funds. Mutual funds, for the most part, they're index adjacent, right? You got some that do okay. You have some that have a manager, right? But all the manager is doing is following the index. So you're sitting there paying a guy to just kind of like be a monkey and pull switches, but they're not really employing any real intellectual property or any real, what's the word I'm looking for? Any investment, no real investment savvy, right? They're not bringing anything special to the table. Most ETFs. That's why there's this whole debate about passive investing, about active investing. So I'm going to give you all the answer to that right now because it's all together. So stay with me. So with passive investing, it's just like index investing, or like most ETFs, right? They follow an index. For example, the Dow Jones. There are mutual funds out there that follow the Dow Jones. The Dow Jones are the top 30 So, well, some of the biggest 30 biggest companies in the country, like Microsoft, Nike, Home Depot, so forth and so on. And you have a fund that'll track that. Well, Dow Jones tells you when to pick that, tells you when to swap it out. Like GE was delisted from Dow Jones. They told all the people that were passively managing that to swap it out. And so the manager really doesn't generate a whole lot of value, in my opinion, right? The active guy needs to bring something to the table. So if it's an active investment, if it's an active mutual fund, if it's an active ETF, because there are active ETFs where there's a guy like Kamari that's pushing the buttons and it says, I want to buy Ford. I want to buy this other ETF, because there are active ETFs where they manage ETFs or ETFs may be part of their overall investment strategy. So yeah, hopefully I'm bringing some value to the table. I'm outperforming the market. Usually what happens is you have these passive or these actively managed funds. And again, they're like passive investing Jays. They don't bring any value. So I just paid this guy half a percentage point more, where I could have got that on the cheap just by doing the passive thing. Now, I'll tell you this. There's a time for active management, and there are some very good active managers out there. And there's a time for passive management. I'm going to tell you right now, after we're done this correction, passive investors are going to win. The time to have active investors is when the market's going down. The problem with that is nobody ever knows when the market's going down, because the active investors, in theory, and when I used to be an active manager, they're supposed to be able to stop the bleeding and hedge and make sure you don't lose as much money. However, some miss it, some don't, but they can stop the bleeding on the way down. However, on the way up, oftentimes they miss it. You can't get it all unless they just invest into a passive fund, right? So when you look at active management versus passive management, it can be very tricky. But again, I will take ETFs all day, every day. That's part of the reason why they have grown so much over these years, and are a major force in the stock market right now. So let's see. Great question, Carter. Great question. Shout out to Bada Hood. Bada Hood is my partner in the Black Wealth Project, or one of my partners in the Black Wealth Project. So yes, I'm not putting bad energy out there, but listen, what's going to happen when people stop paying their mortgage? Well, they already stopped paying their mortgage for a large part, right? Well, let me back up, because I did read a study that said 95% of the people didn't need a forbearance or modification on their loan. But what happens when that runs out? What happens when the landlords have to pay their mortgage, but they haven't gotten any money from their tenants? Something's got to give, folks. Now, again, like I said before, feds can step in, the government can step in, they can create more legislation, they can help speed up, right, the restart process. Nobody knows how that's going to be. Everybody knows the administration has been very much inept in their leadership, but it's not doing well. And so we don't know if COVID numbers will spike. And I think I talked about this again. One of the things that has me boggled, and I believe COVID is real, right? So before y'all get going, I believe COVID is real. However, I see they talk about the testing, and they said there's a lot of false positives. So that makes me wonder just how many people are being tested correctly. And matter of fact, I just read an article about that today. Angela Mitchell, how are you? Thank you for joining us. Yes, Edith, I advise her to advocate for herself. Absolutely. So it's not bad energy. by the hood. It's just, I'm just keeping it funky and being honest. John Graves, Pastor John Graves, how are you, sir? It's a good buddy of mine. Well, 1992, were you driving a Model T? No, man, that was 1902. That was when you were born. Shan Maneker says, can you give advice on binary trading experts? I don't really have an opinion on binary trading. I think options in and of itself is more of an advanced, intermediate to advanced topic. I tend to shy away from those. I've never done any binary trading or binary trading options. So I'm never going to front for y'all or make believe like I know something that I don't know. But I see it as another form of a lottery ticket. Now, who've been rocking with me for a minute? Y'all know what I call lottery tickets, right? It's another attempt at a get rich quick scheme. Seems like everybody wants to get rich quick scheme. I just shorten it. I call lottery tickets because in my neighborhood, I don't know about y'all neighborhood, but in my neighborhood when I was growing up, even my mom, right? I'm gonna hit that number. One day I'm gonna hit that number. But I'm like, damn, mom, the money you're taking to play the lottery, we can invest. Right. So I've always been infatuated or in love with stock market since, I could at least say 10 years old. It grew over time. But I've always thought, well, maybe we could invest the money or do something else with it instead of the lottery. And the biggest winners of the lottery are not the people or the seniors that supposedly are getting these great benefits. It's the governments. It's like their own private little war chest. So, to me, I would rather keep that money in your pocket or at least invest that money. Simply Sugar, how are you? Thank you for joining us. By the hood, I don't know what y'all laughing at. What's so funny? I want to laugh too. Right. Thank you, me. Neiman Marcus filed for bankruptcy. I wouldn't be surprised if Kohl's and Macy's files for bankruptcy also. They're all low on cash. They're all high. High inventory businesses, and so it's rough. It's rough, right? Pier 1 in February. Retail, right? Retail real estate is definitely going to be redefined after this. I mean, even if you saw Starbucks, right? Starbucks is renegotiating rents with their landlords. Starbucks is one of the biggest retailers in the country, right? Cheesecake Factory, straight strong arm folks. They told their landlords they weren't paying no rent until things got better. All right. Right. J. Crew, May 4th. Again, another one. Hertz. Not sure about the Hertz analogy. Right, Miss Edith. Macy's and Walmart are indeed. Is Walmart closing stores? They're closing stores? I can see it though. Okay, Miss Edith said in my hood, organized crime gets the numbers money. So they still got numbers in your part of the world. This is Reek. Thanks for joining us. Yeah, the numbers used to be in this old candy store back in the day when I was growing up, and they ran numbers out of the back. I was always afraid to go in the back, but I knew what they was doing. Right. Yes, Hertz is following bankruptcy. Yes. Ford has a better balance sheet versus Chrysler. Good question. Good question. But I think Chrysler is private though. Let me look that up real quick. Great question. Off the top of my head, I would say yes. I believe Ford has a better balance sheet than Chrysler. Ford is very conservative. If you remember, again, going back to the Great Recession, that whole 07 through 09 period, where they gave the auto manufacturers money, they bailed them out. They made Ford take that money. Okay, Chrysler is FCAU. So SCAU, Fiat Chrysler is FCAU. And let's pull up their balance sheet. Because now you also have to factor in Fiat. Okay, their market cap is 18 billion. All right. Let me look at something. What's Ford's market cap is 23 billion. And so actually, everybody, this is a great exercise. One of the things you want to do if you're looking at a company, one of the things you should do is compare them to their peers and see how they're doing. So Ford has a market cap of 23 billion. And I'm writing this down on a sheet. And Chrysler has a market cap of 18. I just said, I forgot. I just said how much money Ford had, and I forgot that quick. I want to say it was like 35 billion, but let me grab it. Let me grab it real quick. Let me grab it real quick since I'm here. Bear with me 1 second. In the last quarter. Right. Okay. Ford has 46 billion in cash. Cash and other short-term equivalents, right? Let's see what Chrysler has. Now, what do y'all think? I want y'all to guess this. Do y'all think Chrysler has a better balance sheet than Ford, or Ford has a better balance sheet? Put that in the comments. Let me know what your thoughts are. Oops. Balance sheet. Quarterly. Total cash, 13.28 billion. Now, for the record, just because Ford has more cash than Chrysler does not mean they have a better balance sheet. So I don't want y'all to be confused by that. But by them having more cash means that they can sustain a longer downturn in the market than the Chrysler can, unless Chrysler starts to liquidate their stuff. So I'm going to look at, and I kind of want to nerd out on y'all with some accounting equations, but I'm not going to do it. I'm not going to do it. Not going to be able to do it. So Chrysler has roughly 69 billion in liabilities in total. Right? So remember your balance sheet, right? Your balance sheet is made up of assets, which are things that have value, that appreciate in value. And my breast, Ving Rhames baby boy impersonation. And it's made up of liabilities. Liabilities are things that typically cost you more money or go down in value and price. Typically, liabilities are loans and things like that. And then you have equity. So you have assets. So I'm nerding out anyway on y'all, just so y'all can understand it. So you got assets, liabilities, and equity. All right. And so assets equals liabilities plus equity. Don't worry about it if you don't understand it. So right now, Fiat Chrysler has $95 billion in assets. They have 69 billion in liabilities, right? So that gives them roughly a net equity of about 26 million bucks. These are all important numbers to know. So that might be a little boring, folks, but just bear with me. And if you are home or stable, take notes. Take notes. Now I'm going to Ford's balance sheet, right? And what is the balance sheet, right? I just told y'all the parts of the balance sheets are assets, are liabilities, and equity. But what exactly is a balance sheet? A balance sheet basically is there to tell you if you are in a good financial position or in a bad financial position. Just like if you're a regular individual, they talk about your net worth, right? So do you have assets? Do you have liabilities, right? Do you have a lot of credit card debt? You got a big mortgage? Did you buy too much house? Do you have assets? Maybe not. Maybe so. Are you upside down? Do you have a positive net worth or negative net worth? Same thing with companies. The people over there try to make it sound more complicated than what it is, though. All right. So Ford, again, I told you all. Let me go back to the quarterly because that gives me the latest up-to-date news. So, like I said, Ford has 46 billion in cash. Total assets. Ford has 264 billion dollars in assets. Again, 264 billion dollars in assets. It has 230. Wait a minute, am I reading this right? So it has $234 billion in liabilities. Oops, I did the wrong one. So the total equity is about 30 billion bucks. So Ford has more cash, Ford has more assets, Ford has more equity. So I would say that Ford clearly has a better balance sheet than Chrysler. Okay, Pada says they may be here, but I don't know what Ford will be. Not a fan. Hey man, I get that. Demetrius says Ford is a part of my retirement plan. I'll keep buying. Sharon says I brought it when you said it weeks ago. So all y'all buying my stuff. I told you I don't be buying my stuff. I own stuff. All right, so Carl Davis, it seems like the only one that understands Rule 72. All right, hold on. Chili, I think Chili understands it. Sharon understands Rule 72. Chili Davis, Tesla at 350 and at 600. I don't know what you're talking about at 350 and 600, Chili. Carol asked me, speaking of gas, what do you think about iShares Global Energy ETF? I think that ETF is ICLN. I like it for for global energy. I like it. Yeah. I think it's clean. I think it's clean though, right? Let me double check that. Are you talking about the clean one? Or are you? There is a clean one, or is there also just a plain global energy? Global energy ETF. IXC. IXC is so I was confusing it with a different one. I got a bunch of ticker symbols running around in my head. So here, I'm gonna pull IXC up on the chart. Matter of fact, let's do this before I even get to go there, right? So we talk about doing our due diligence when it comes to investing. So remember, I told you all when you're looking at ETFs, go to the sponsor, to the provider, to the creator. And so iShares is the manufacturer of that. iShares Global Energy. We'll definitely have a page on iShares.com. Let's check it out. Let's see what's in there. Let's see what it's all about. Let's kick the tires and pop the hood. So iShares Global Energy ETF. Can everyone see the screen? Let's take that off for a moment. Well, let's go to the screen. All right. So remember I said you want to look at the investment objective. So the iShares Global Energy seeks to track the investment results of an index composed of global equities in the energy sector. So they're buying energy companies around the world. So YICX, exposure to companies that produce and distribute oil and gas. Targeted access to energy stocks from around the world, used to express a global sector view. So this here, I love these hypotheticals, right? So if you would have invested $10,000 in 2019, December 31st of 2009, your money would now be worth roughly, it looks like about $20,000. All right. So let's see what's in here. Let's see what's in here. It's got about 60 holdings, so it's carrying 60 different shares. So one day I want to talk about diversification. For the record, diversification is very, very much overplayed. I don't know if y'all remembered I talked about there being different types of advice in the advising space. Like there's middle class advice, and then there's advice for those who are more up to do, so-called upper crust. All right, so the fees here, it's 46 bips, right? Or let's say 46 100ths of a percent. All right, so to get the 1% here, right, it's just one, it's 46, it's roughly half of it. So it's roughly a 0.5%. That's what the company charges to manage that fund. Normally, a mutual fund would probably be more than that. Now, so you have Exxon, you have Chevron, you have FP, BP, Royal Dutch Shell, Enbridge, another Royal Dutch Shell class share, or share is another class of the stock. ConocoPhillips, so like we talked about ConocoPhillips. So if you wasn't sure about what stock to buy, you can simply buy an ETF if you think the energy sector is doing good. And there's several ETFs, right? So this is the global one. 50% of the companies are, 51, almost 52% of the companies are located in the United States. Almost 14% are in Canada. The United Kingdom. Almost 13% is in Canada. 6% is in France. 2.5% is in Australia. 2% is in China. 2% in Brazil. So you can see that going all the way down, right? And then there's other reports. And then if you really want to get fancy, and this is what I suggest a lot of people do, is right, start researching these companies individually. So again, we talked about ConocoPhillips earlier, but you're like, well, I don't know if Conoco is going to be the best energy company to go with. I don't know if Exxon is going to be the best, or Dutch Shell or BP. Well, you can buy this ETF. Again, this is not an investment recommendation. This is for educational and entertainment purposes only. Before you buy an investment, talk to your investment and tax advisor. All right. So think about that. But okay, so what I was going to say is I lost my train of thought for a minute. So what I was going to say is if you don't know and you're just now learning, you can buy an ETF. But inside of these ETFs, you can start studying the companies. ExxonMobil. Where does Exxon make most of his money? Is it a refiner? Is it a manufacturer? Is it into pipelines? Because there's basically three phases in oil, right? You have your refiners who dig for the oil and then pump it out. You have your mid stage, or I forget what they call it. It's mid something. But then you have your oil people, right? So they take the oil from the refiners, they pump it through their pipelines, right? And then they get it to the refiner. So there's kind of three stages of it. You got your refiner, you got your pipelines, and then you got your I'm sorry, I said that wrong. Let me back up real quick. Let me show you something. All right, so you have your exploration, right? Your oil digger. They drill for oil. They're drillers. Excuse me. Your drillers. You have your drillers. The drillers bring the oil up. Then the drillers take the oil and they feed it through the pipelines. The pipelines then deliver it to the refineries. All right. And so each one of those has a different way of making money, right? So your oil people are very closely correlated. Your oil stocks are very closely correlated to the price of oil. But then when you look like a pipeline, I'm trying to think of it. I know Energy Transfer Partners is one. KMI is another one. Kinder Morgan is another one. Well, they discharge a toll. They get paid on all the oil moving. So a lot of times, if you look at some of your pipeline folks, their stock prices don't yield. They don't fluctuate as much as the refiners or the drillers. And then you have your refiners. They're refining the gas into kerosene. For jets, to diesel for a lot of the trucks, to regular gasoline for a lot of the cars, sometimes diesel for the cars as well. So, there's a lot of different ways and you can chop it up. But you can start doing your due diligence and research on each one of those companies. Is VZ undervalued right now? I think VZ is undervalued right now. But VZ is kind of in a rough place. There's a lot of competition coming on the market with Sprint and remember I told you I said it's trash plus trash. Sprint and T-Mobile, right? Trash plus trash equals trash. With T-Mobile and Sprint, you got AT&T, which is a fierce competitor, and they're buying up stuff as well. So it's hard for them right now, but they've got a great dividend. They still have the top cell phone service in the country. So I don't think they're going anywhere anytime soon. Trading at $55, and their dividend is 4.53%. So I ain't mad at VZ right now. Daniel Bergsteiner, how are you, sir? Thanks for joining us. I think the first time he joined us was last week. Thanks for coming back again. Thoughts on investing and recently IPO stock like Work. How much time do you think is a good price? So for the record, I hate IPOs. And let me clarify. I don't even what is Work? Oh, Slack. Slack's Work. Okay. I like Slack. I use Slack. But Slack came on the market last year though. So all right. So when I'm talking about IPOs, I mean I'm literally talking about IPOs when they IPO, like the first day on the first week. I don't like IPOs. Again, somebody typed that in the chat. I almost feel like IPOs are spawns of the devil. Just like I say, penny stocks are spawns of the devil, but not as much. There are some times with IPOs where IPOs come out already making money and already established. And it's not that IPOs are bad, right? It's not that they're bad. But for my audience, the beginner individual investor, a lot of times people get fleeced on IPOs because people don't realize that all the early investors into the IPOs, you got your angel investors, you got your venture capitalists, and then you have your other institutional investors. They all get first dibs at the stocks before it IPOs, and they get it at the actual IPO price. And so when IPOs actually get to the market, you don't get the IPO price, you get the market price. And depending upon, what stock it is, the IPO price could really jump and you could really overpay for a company when you don't need to. So I say, don't buy the IPO, just wait. Even if it runs, just wait. I got some notoriety many, many years ago when I had a radio show. I told people to avoid the Facebook IPO. People avoided it. People loved me. Guess what? They got mad because I didn't tell them when Facebook went down to like 16 to buy. So they were mad that I didn't tell them to buy at 16. But I told them to avoid the pain though when Facebook first came on the scene. So but I think it's important, right? If you're going to do an IPO, again, just like any other stock, understand how the company works, understand how they make money, where they make money, right? Understand what their profit margins are, and understand if they really have a good management team or not. Do you own Work? Do you own Slack? Hi, Tiffany. Welcome back again. You been on the whole time? Yes, yes, please speak. I like it when y'all talk to me now. I don't want to be on here by myself, you know. Yes, Prison Leader by AT&T and Sprint. I got to look that up. I need to look that up. So 3 stores are closing for Walmart. Yeah, I believe it. Thank you for joining us, Aaliyah. Is it Aaliyah? Aaliyah? Tell me how to say your name. I don't like messing up names. People messed up my name all my life. All my life I had to fight over my daggone name. I get called everything from calamari to calamari to Camaro to Camry, the whole nine. All right. Right. So REIT, Real Estate Investment Trust. Thank you. Thank you, Aaliyah. Or Leah. Jake Gill, By the Hood in the building. Love the podcast. Yes. I've been on By the Hood several times. They like to have me come on and talk about taxes because it seems like it ain't enough people out there talking about taxes. So yeah, I love By the Hood. Go visit bythehood.com. If Jimmy or Corey is in there, somebody give me the web address. But I know the podcast is in the iTunes store. Wish I had taken finance and investing classes in college. It's not too late. You can take them now. Like there's a lot of free stuff online. I believe Yale. Dang, I can't use my phone. I want to say Yale has through the iTunes University. Yale has a finance class, and I plan on doing a video. Right? I don't like all these gurus out here. I think most of these gurus are full of caca or poo poo. But I was going to do a video. I probably still will. Just talking about some really solid resources where people can get real financial education. Not for me, but some like real big established institutions. So right, Yale has open Yale courses. They got open courses at Yale. And so there's a gentleman by the name of Robert Shiller. Robert Shiller is very popular in the finance space. All right. So there's a course on there. It's free. It's free. It's free. You can take it. I encourage you all to take it. A better financially astute community is a better community overall, right? But then you can start to understand some of these moves because I see a lot of us, we hate rich people. We hate the 1%, even though the majority of 1% are actually self-made. For the record, I hate the term self-made because nobody's actually self-made. Everybody had help somewhere, somehow, some kind of way. But it talks about, I'm going to read the description, all right? So it's an overview of ideas, methods, and institutions that permit human society to manage risk and foster enterprise. Description of practices today and analysis of prospects for the future. Introduction to risk management and behavioral finance principles to understand the functioning of securities, insurance, and banking industries. All right. So the Yale College course taught on campus twice per week was recorded for open source back in back in spring 2011. So they got like curriculum and all kinds of stuff, outline syllabus, the whole nine. And you can watch Robert Shiller on video. And he's often interviewed on CNBC. He's often interviewed on Bloomberg and any other major financial station. And if y'all not familiar with Robert Shiller, he's the guy who created the Shiller Index. And the Shiller Index basically tracks real estate. All right. Okay, so you picked up some shares at 300 and 600 long-term, building a position. Hey, Shiller, you let me know. Have they gotten profitable yet? Was just talking about Tesla not too long ago. All right, Dave Ramsey versus Robert Kiyosaki versus other. What about him? What about him? You don't like him? You like him? You love him? Tell me what you're thinking, Chili. Yes, ConocoPhillips is in there. Yes, they are. Yeah, started building a position. It's like, okay, all right, Daniel, I want you to keep us abreast of that. Do you know how Slack makes money, Daniel? Where they make money? Who are some of their biggest customers? They've got some big customers. Yeah, Slack's definitely going to pop. I personally like Slack because I hate email. Sometimes email gets lost for me, and I can't keep up with email. Full transparency. I like Slack a lot better when I do it when I'm working with teams and things like that. Everything's in there. Yeah, it's a great tool. It's a great tool. It's a great product. All right, so let's see. All right, so Miss Edith lives in the Bronx, and the people are still running numbers up there. Don't be snitching now. I don't want you in no trouble. All right, so Lone Wolf 09 says, I think Ford because moving to majority trucks is more profitable model. Well, they are the biggest pickup truck manufacturer in the United States. That's one of the reasons why I like Ford, and they're moving very close to. They've already got electronic vehicles on lock. I'm Asakai. How are you? I hope I'm saying your name right, and forgive me if I did not. Ving Rames, that's what it's all about, baby. Guns and butter. That's why I should create a guns and butter segment. I can't tell you how much I love that. I love that scene. Like I think the guns and butter scene and Baby Boy is probably the best scene ever. Shooting Stars Music, thanks for joining. Thank you. The bourgeoisie. What did I say about the bourgeoisie? Okay, Cool and Deadly. How are you? Thank you for joining, Cool and Deadly. KB333, how are you? Or Cabby333, how are you? Right, IPOs, not IBOs, IPOs. IPO stands for Initial Public Offering. Just for the record, IPO comes into play where a company was once privately owned, and then they say, you know what, I want to raise capital, and I want to open myself up to ownership with the public, and so they allow the public to invest. So Leo Lady, how are you? Jackie Mayfield, how are you? It's been forever. Yes, there are a lot of alleged gurus. Yes. Jay Cherie, how are you? Upper class. I'm not sure what that is, Miss Edith. But if nobody has any questions, I've been on for almost 2 hours. It seems like 2 hours. Oh, you know what? There's a question I never got. Love and Earn, how are you? I hope I said your name right. There's a question on IG I never got. Okay, so Tay Digital asks, what do you think of ticker symbol INSG? Oh boy. Let's see what it is. That'll be the last question for the night. And I hope, wait a minute, did I get everybody on IG? I hope I got everybody. I mean, everybody on YouTube and Facebook. Hope I got everybody. All right, so let's look up the ticker symbol INSG. It feels like a penny stock. I'm getting this funny feeling that you got me looking up a penny stock. I want to say you've been rocking with me for a minute. By the way, that rollerblading, I think it was rollerblading video, was crazy. Oh, it's not a penny stock. All right. But the company is only worth $1 billion. So it's clearly a small cap company, a small capitalized company. Okay, so INSG Inseego Corp. Inseego Corp. What is Inseego Corp? I hope I'm saying the name right. Do you own this? Tay? All right, so Inseego Corp engages in the digital and development of mobile Internet of Things, IoT, and cloud solutions for large enterprise verticals, service providers, and small, mid-sized businesses worldwide. The company provides wireless 3G, 4G, 5G. No 5G conspiracy over here, right, folks? 5G hardware products for vertical markets, including private LTE 5G networks, first responder networks, authority, fishnet. Okay, so it's basically like an IT/telecom company all wrapped into one. I don't know So the company has not been profitable yet. They have revenues of over 200 million. But they have losses of 51 million. And they've had a history of losing money. So it looks like, just looking at finance.yahoo.com, everybody look at finance.yahoo.com. That can be one of the first places you go to just start doing research on the stock. But going back to 2006, they lost 60 million. 2017, he lost 45 million. 2018, he lost 8 million. All right, so that's a good year, but I don't know why. Again, started losing money again at the end of 2019 for 40 million. So, not that sexy in the sales department. They got about 12 million in cash. 12 million in cash. They got almost 200 million in liabilities. And they have 161 million in assets. So they have a negative net worth, everybody. A negative net worth. All right, so I would need to know a little bit more about the product or service. I mean, I've read it, but I don't know exactly what it is. I was looking at Debbie Wilbur. I was looking at finance.yahoo.com for NCGO. NCGO. Ticker symbol is INSG. If anybody wants to look it up, INSG. NCGO. All right, that's the ticker symbol. So let's go back to the comments. Okay, Debbie Wilbur says, thanks again. I appreciate the thanks, but what did I do? What are you thanking me for? My pleasure. My pleasure. I know that was for the Yahoo, the finance.yahoo.com. So I don't know. Let me see. So yeah, I don't know. DJ Soul Rocker. What's up, Ryan? How are you? You rocking tonight? Everybody follow DJ Soul Rocker. He's one of my favorite DJs. We went to high school together. Kid turned out good. He graduated after me. But my class, I ain't saying my name. My class year, because then y'all be trying to figure out how old I am. All right. Link Lock, how are you? Thanks for joining. Yeah, so what do you think? Say, why'd you buy it? Why did you buy what you brought? Oh, well, okay. Well, I appreciate that. Is it Devi or Devi? Help me out. Help me phonetically spell it properly. You're welcome, Miss Carol. Do me a favor. Spread the word about me. Help more people. Help me help more people. Spread the word about me. So what do you think about it, Tay? That's right, Ryan. I get to mess with you now. I got the mic now. So anytime Ryan is spinning, you know, we always joke around and play around about music and things like that. I don't know if he knows I'm a real big music head. Clearly he's a bigger music head because he is the DJ. So he's probably crate diving more than I am. I would love to do that, but we always joke around and he takes the mic and he plays around with me and cracks jokes on me. It's all good. It's all love. So Tay, come on, talk to me, baby. Talk to me. Talk to me. Why did you buy that? What did you like about it? Last question, and then we're gonna go. Okay, Devi, that's the first one. Okay, cool. All right, Tay. All right, you know what, IG? My time's up. I got 51 seconds left, 49 seconds yet, 47 seconds left. Okay, Debbie, got you. Debbie, Hey, Ryan, I encourage people all the time to invest on Cash App. I got a video on YouTube where I tell people to invest on Cash App. I'll inbox it to you when we get done. But all right, folks, my time is up. Y'all know I'll be here next Wednesday. Don't forget about Saturday. You know, every Saturday at noon, we do a wealth conversation. This one's going to be very good. It's going to be with Kelly from Kelly's Closet. Kelly makes lingerie for the plus size woman or the thick woman, as I like to say. So tune in on Saturday at noon. And I'll be back Wealthy Wednesdays, 8 p.m. next week. All right, everybody. Have a great night, and I will see you all soon. Bye-bye.